will this webinar help you? It will help you to adjust to the current crisis. And I think it goes without saying that all of us have been affected in one way or another. Even KCB has been affected, but they are adjusting. They're saying, instead of coming to the banking hall, we are bringing the bank to you. You can go to KCB Mtaani, you can use your mobile phone, you can use online banking platforms, and so on. So also for you, this webinar will help you as a business person, a business lady, or a man. I can see there are some men in the house, to adjust your business. Number two, help you to plan for the future confidently, knowing that you have money. Your business cannot be powered without money. And then lastly, we want to view this crisis as an opportunity. But I think suffices just to say that, COVID is not going away in a hurry. So we need to see how we can restructure our businesses to move forward. Now, let's start off by looking at some basics in borrowing. And now we are going to look at it through the eyes of the COVID-19. A little activity here again. Now we are asking, why might you need to borrow? Why might you need to borrow? And especially now during COVID-19. The objective here is to determine the reasons. Why would you want to borrow? So the directions are, number one, think about why you would want to borrow in this pandemic. I have heard you saying, I have a dream, I want to buy land. I want to buy, I want to construct a factory. I want to buy some catering equipment. Those are some reasons. Are there any other reasons that would compel you to want to borrow at this time? When you think about borrowing is initiated by you, the borrower. Borrowing is never initiated by a financier, whoever that financier may be. As we go through COVID-19, we need to look at the changing needs of the customers, of the business environment, and position our businesses to be able to get into that space and get that money out of the customer's pocket and into our business. Maybe you need to bridge a working, cash flow gap. Perhaps your customers are not paying you as well as they used to before. So money is still out there. It is due to you, but you have not been able to collect it. And yet you need to keep the business up and running. So that would force you, for example, to go and take a loan. So if you have a short-term need, you will go for a short-term solution, so that you can get a loan that will help you, or you can get into an arrangement with the bank or a facility that will help you to meet that short-term need. Short-term means something within the foreseeable future. Maybe in the next few months, I know this person will have paid me and then I'll be able to return, and so on. So there are short-term solutions and there are also long-term solutions. So that's what guides you when you're thinking about borrowing. So in terms of long-term capital, investment capital, we're looking at things like somebody who is saying, I need to, buy some equipment, I need to buy a motor vehicle, things like those. Now that you have determined that you have a need and you want to borrow, the next step is to try and figure out, where can I get that money from? And this slide here is telling us that there are different places. As you're window shopping, so to speak, you're looking at different places or different options where you could get that money. One option is personal savings. For the longest time, we have been trying to encourage business people to save. And I have been through countless sessions where I have been encouraging people to save. And there are those who have told me, honestly speaking, Sarah, saving, I can't save. And we have gone through a step by step, just trying to encourage people, you need to save. Now, we used to say, save, because the savings will save you, zitakuokoa, on a rainy day. People were saying, what rainy day? COVID has come to remind us that it is important to save, because those savings are what have been keeping us going, even as our livelihoods, financial livelihoods, have been affected. Business savings. It is important for you as a business person to have that reserve fund, to set aside money that you put aside, so that when you go through, you know, your normal business operations, and maybe you get some lump sum payment, don't spend all of it. Maybe you're in the retail business or in the wholesale business, and there are certain products that you get from your supplier somewhere. The supplier will tell you, it's okay, you just go ahead, sell those, and when you get money, pay me back after 30 days. So actually an unsecured access to finance. It's unsecured. It's actually credit, and it is inexpensive. So some of these financiers, there's the Safaricom, Fuliza, there's Kiva, there's Enablis, there's Zidisha, there's Seed Capital Investment, Growfin, Fanisi Capital, and the list goes on and on. So what we are saying is, you have a need. You need to borrow. You need to go out and see which is the best place that you can access this funding from. Now that we have said you need money, you go window shopping, find out where is the best place to get that money from. You have considered all those things. Now you're ready to borrow. So what we're saying is that you need to consider. You need to think about this, because this is your reputation on the line. CRB does not give us an opportunity to go and explain to them that it was not me, it was actually my partner. So these are some of the things that you have said you consider. The interest. What is the cost of that borrowing? What are the charges? Is there a processing fee? How much is it? Is there insurance? Are there certain bank charges that I'm expected to service month on month, or how often? What is the repayment period? Do I have security? Is there a moratorium period from the time when I get the loan to when I start making the repayments? Those are some of the things that you consider as you continue to make that decision. In as much as you are considering some things on your end, you can bet that the bank is also considering whether they should give you that loan. And the first thing, when you go to your relationship manager and you tell them, I need a loan, and they'll ask you, really, for what? Because I see an opportunity. Really? Tell me about it. And you'll explain with all the excitement. At the end of the day, the banker will tell you, that sounds wonderful. Now, just go and write it in the business plan, and please bring the business plan to me. Why? Because the business plan will force you to think, to crystallize your thinking around that business opportunity and how you're going to position your business to take advantage of that. Marketing is the engine and driver of your business. Your production operations plan is the heart and soul of your business. You can make promises to customers out there, but do you have it within your business to be able to deliver? Those are the questions that you are answering in your operations or production plan. The financial plan is the lifeblood of your business. And in that plan, you're answering some questions. How are we going to keep that business? How will we ensure that cash is coming into the business? How will we be able to meet our expenses and so on? And this is what the lender is looking for. The business's profitability. Tulisema profitability ni uwezo wa biashara yako kuzalisha faida. The business's ability to generate sustainable and suitable profit, to be able to repay the loan. That's what you're talking about. All those things will be answered in your business plan. Solvency, your ability to be able to meet obligations as and when they fall due. You have a financial commitment. What are you doing? Because you are employee number 001. You're the one who makes decisions. So what decisions are you making to ensure that there will be money in place to service that loan obligation? Liquidity. There's no business here that can work or can move without money. So liquidity is important. This is the business's ability to generate cash to be able to meet the needs of the business as you go along. And of course, the bank will also consider your repayment history. What kind of a person have you been all this time? Are you the kind of person who is servicing your loans and your obligations? Those are some of the things that they will consider. I want us to talk about the 5 C's, the 5 C's of lending. So this, it's important for you as a business person to understand that these are some of the things. Ujipime nguvu nyumbani long before you go to the bank, long before you pick up that phone, long before you set up that meeting. So I want to help you. Arm yourself so that you can access that money that is available for you to tap into. Number 1, character. Number 2, collateral, capacity to pay, conditions, and capital. Those are what we refer to as the 5 C's of lending. Now let's look at the pandemic's effect on lending. Things have changed, and at this point I would like to invite Moses. Moses, can you please take us through this slide?
In a banking scenario, we refer to the principles that you've given us as Campari. We call it Campari. So Campari is just an initial that simply refers to everything that you've just said, which we have C standing for character. Which, if you look at what you've gone through and everything that you are trying to tell us, C actually stands for the character. So what is the character of this particular person? And A stands for the ability. What is your ability to pay this loan? And M stands for the means. So what are your means, or what are your margins, and what are the areas that you're going to? P stands for the purpose. What is the purpose of this facility that you're coming to pick? We must always have a reason why you're coming to take this loan. A stands for amount. If the purpose of whatever you're going, for example, home improvement. We even give loans for home improvement, called the white goods loan. The moment we do that, then we are able to understand, are you taking 1 million to go and do your home improvement, or are you taking a 10 million to do it? So sometimes the amount really matter. And R stands for repayment. Repayment ability. How are you going to pay this loan? And where is the money going to come from? Of course, it is intertwined with some of these things. And then I stand for interest or insurance. Is there any insurance, or is there anything that KCB as you have put in as a person that you're going to be able to understand when it comes to this particular thing? So those are quite just in a sneak preview of whatever the banks looks at when we are lending to our customers.
In the first instance, you find yourself maybe skipping a payment. That's what we call delinquency. Then maybe it's 2, 3, 4. That becomes a default. What we are saying is, as you can see that building there, that's KCB, and they're saying we don't like surprises. Please be proactive and communicate to us. We want you to succeed, but please tell us the kind of challenge that you're having. Then now we can restructure the loan, which is what the last point is talking about. So of course, the loan doesn't go away, but you restructure it in such a way that is friendly and flexible and easy for you to continue to service.